For those who didn't know, Cathie is an American active investment manager who is the current CEO and CIO of ARK Invest, founding it in 2014. She has over 40 years of investment experience, previously working at AllianceBernstein as CIO, co-founding the hedge fund Tupelo Capital Management, as well as working at Geniston Associates in the Capital Group. She is a thematic investor. Her investments allocation focuses on our 5 big ideas: artificial intelligence, or AI, battery technology, blockchain, robotics, and gene sequencing. These are all emerging technologies and industries she sees as significant disruptors to the status quo. Due to being disruptors, she believes that the industries will provide higher returns than traditional industries. To sum up her investment philosophy, a quote from her: "We are dedicated completely to disruptive innovation. Innovation solves problems." Her flagship fund is ARK Innovation ETF, symbol ARKK on the New York Stock Exchange ARCA. The top 5 equities in the ETF are Tesla, Zoom Video Communications, Roku, which Ryan will be going over, or he did go over at this point, CRISPR Therapeutics, and Block. Aligned with her philosophy, these are all growth companies in her 5 disruptive sectors. She's an active manager, meaning she will rebalance her portfolio based on her own outlook, in contrast to passive management style, which replicates an index. Investing in the future sounds great, with a long-term perspective, right? We would agree investors should take a long-term perspective, but that does not guarantee long-term returns. She has not been very successful in recent years as the market became bearish. The ARK ETF has returned 48% over the past 5 years versus the NASDAQ 100 index returning 118%. The ARK ETF was producing a higher return until early this year, but as the market collapsed, Cathie's funds were dropped by more. Why is that? She is a strong believer in these technologies and was willing to pay any price, which during the post-pandemic bull run got higher and higher, misaligned prices from the fundamental valuations. This is our main criticism of her style: paying any price for a company. No matter how strong a company is, you can always pay too high of a price for that company. Investing in growth stocks in emerging industries has always had higher risk, especially in the main phases like 2021. When you do buy growth stocks at these high prices like she had, you're accepting even higher risk and need them to pay off. Most of her holdings do not have positive historic earnings, and if they do, they're very low in respect to price. Being true to her style, she has accepted these risks of no earnings for the expectations of extremely high earnings in the future implied by the high price. She believes that not holding innovative companies has a higher risk than investing in entrepreneurs and startups. Her current market expectations look into the 2030s, and we will likely have to wait until then to see if her picks work out. In summary, she is a visionary, thematic investor who takes higher risk bets on the future.